I thought you were going to say it first this week.
I'm not listening. The problem.
If I kept it silent, he would introduce the show.
No.
He's on a new computer. He's changed direction. Everything is all new. Everything is all new this week. The lighting looks good that way, mate. It's a good look.
Does it?
Yeah.
Oh, there you go.
Still is hairy, but the skin's looking very smooth, mate. And I can see that you have sunshine in London, which is never a bad thing, right?
Well, yes, we've got, not at the moment, it's a little bit cloudy, but there's some sun that keeps popping in and out. It's it's not been the best summer, mate.
Has it not? Every summer said that, barring like 10 days
Last
or 2
year I
weeks.
was the only one, I'd say.
We'll talk about the weather. Let's have a bit of music first. Bit of Bella Ciao. So guys, good morning, good afternoon, good evening, wherever you're tuning in around the world. This is Pips Like a Pro, the live show with me, Gavin, the host, and Mr. Andy Demi, the man, the myth, the legend, our resident professional trader, who's not in the sunshine today.
No.
He's not happy.
What's going on, everyone? Great music to start the day off.
Okay, enough of that. We have got an action-packed show again, so that is enough of the music today. Just checking in with the comments. I also want to check and see that we're going live on Facebook as well. Yep, we are live on Facebook. Oh, awesome. So guys, if you're new to the show and you haven't logged into the StreamYard link, pretty please do, so that we can see your name and your face. So we've got Abby, a new name I haven't recognized before. Morning to you, Abby. Brucey is in the house. Hi guys, just saying hello, taking my daughter out for the day. Love, Brucey. Hope you have a great day wherever you are going to be, Mr. Bruce. Thanks for your message. VJ's in the house. Good to have you with us, mate. And the first comment of the show of the week, Slavak, live on YouTube. So we are also broadcasting live on YouTube. We're also on Facebook. So you get your choice, you get your pick of wherever you want to watch the show. So today we'll be talking about all things FX. And Andy's showing us his side profile. I think he's doing a modeling portfolio. He's just working out his angles or something. It's good for photography if you're going to become a model, not so much for webinars, mate. Not sure about that.
That is true. But I'm just getting all the charts up, so we are ready.
Cool. So what's been happening over the weekend? Either trading related or non-trading related. How is everything with you in Mr. Demi's world? First of all, have you been getting some sleep yet?
Well, mixed amount of sleep, but we've just been not a lot going on, to be honest. On Thursday, I think I told you I had a great day out. We ended up in Margate in the end, so we went to Whitstable and Margate with about 20 of us. Wow. So it was a good, really good day out, and just catching up with old friends, and really enjoyed it. Actually, it was nice to have a break, and we did get a little bit of sun, and it was great for the kids as well. So that was good fun. Absolutely knackered the next day. So but it's so good. I mean, it was one of those where like you're tired the next day, but also refreshed at the same time. Like your brain's had almost like a detox. Like it's had a break from trading, from work, and from being in the same environment. I think it's super important. So from that point of view, I think It was great, and we'll do something again in a couple of weeks. And so a few of those little things planned for the rest of the summer until we have our big holiday next year, which I can't wait for.
Have you chosen where you're going to go yet? Obviously, madness prevailing.
Yeah, almost certainly going to be a Greek island. So somewhere in Greece. We've probably Crete. I've never been to Crete, so it's somewhere I'd like to go.
It's nice. Yeah, it's nice.
Yeah,
guaranteed sunshine. So that's what you care about, really, isn't it?
Yeah, and the thing is as well, I've got to think like anywhere further away, you're looking at, long flights with kids doesn't really appeal to me too much. And the reality is it's not the holiday that I would choose. Like, I like to sort of travel and sightsee and get a car and go to a million places. But with kids, it's going to be like a nice hotel, that kind of stuff. But we'll make sure it's great, good food, that sort of thing. So nice to.
You know what they should do? They should invent soundproof booths in Upper, shouldn't they? And then business people and executives, they could travel with kids then, like young kids, and not have to worry about them screaming and stuff. Unless there's some sort of health thing that I don't know about. Obviously, I am the childless one out, the both of us. Is it just because of like the screaming baby and stuff like that you wouldn't do that?
I think it's also that they'll be restless. So it's not so much that they'll be screaming, they'll be wanting to run around. And, that's 4 hours, even to Greece, it's about 4-hour trip. So that is enough to have to manage them. So,
for you. So it's more about your older ones than the youngest.
Yeah. To be honest, well, we don't know by that point, but like when we traveled with the newborn before, it was actually really easy. They just sleep pretty much for the whole journey because the noise actually helps them sleep on a plane.
Yeah, white noise and all that, right?
White noise and stuff, yeah. Oh. So we actually found it very easy when we went. But yeah, with the other ones, they're going to be a nightmare, without a doubt. My sister's just gone to Cyprus, and she said she's got 3 kids, and they were an absolute nightmare for the whole journey. She actually thought that they would be sleeping because they didn't get much sleep overnight. I said, "You got to be crazy. The kids are excited. They're going on holiday. There's no way they're sleeping."
They're just going to be grumpy then, right? For the rest of the holiday. Facebook user has said, just have 2 holidays, one with the kids and one adult holiday. That is a great shout. That is a very good shout. And maybe we can talk about that in another show, because we've spent the first bit of the show with a thrilling start to the show this week. If you are new to the Crypto and FX Traders Club, you're probably thinking, what are they talking about? This isn't trading. Give me my value for money. So we are going to endeavor to do that right now. Just going to say a big shout out to Besmir, who's another new name tuning in live on YouTube. And also we've got someone tuning in from Melbourne. I'm guessing you're a new user as well. So if you can click on the bottom of this link to StreamYard, register your name and your email so that we can see who is commenting. That would be awesome. So today, as usual now, we're going to go break down the Dixie or the DXY, the US dollar strength on the chart, see how that's looking for the next week. Also, we're going to analyze the big FX news events. Already there's been one I saw earlier. There was so the yen in Japan, some news came out almost double what they expected it to be. So I was looking at the Aussie yen, and the Aussie yen pooped itself and went right down to a nice support level, which was great. And apparently the news that came out was that the yen came out something about economic employment or something, I can't remember, but it was like almost double what it was forecasted. So obviously it caused the Aussie yen to go down. One thing I want to talk to you about before we jump into all the technical stuff and really go into the mindset of a professional trader. So if that's what you're here for, then you are in the right place. guaranteed. Obviously, do your own research or even contribute in the comment section. Let us know what you're thinking about, what you're looking at, and any questions that you've got. Whilst we're here with you for the next 30, 45 minutes, we'll try and give you as much value as possible. So one question that I do want to ask you before we do that is with regards to if you get into a trade or when people get into a trade, what are some of the best ways to manage that trade with regards to looking at taking profits? Because obviously, you know, it goes up. If you've ever been in a trade or if you've never done it yet and you're about to do it, you're jumping on a roller coaster, which is a lot of fun, but it's kind of like it never goes in a straight line. So it's kind of like, especially the longer you hold it, the more you're going to have to ride through that shakeout. So if you just want to talk to us a little bit about some of the things that we can do to look at trying to get the most amount of profits. Because there's one thing, and I remember thinking this when I first started, that you have to do these blockbuster trading moves. You have to get 100 pips, 200 pips, 400 pip moves. When not necessarily that's the case. You can still hit your 10% target if you want to become a funded trader, the old-fashioned way now, with regards to having to pass an assessment. But it's not necessarily the case that you have to get these big blockbuster pip moves, right?
Well, I think the biggest thing is that if you understand how to make a higher percentage, it's more important than the amount of pips that you're making. So, and that comes down to your timing. So how well you time the market. So if you are, you know, if you catch a 600 pip move, I mean, it sounds great, but it also depends on, you know, what stop size you've got and therefore what position size you've got. So it's about, for me, if you're going to get higher returns, it's about learning to be patient, waiting for the right price, and then so getting in at a good entry price. So sometimes we might look at something and we might think, yeah, that's going to go up because it's, you know, it's got a clear path up. You know, maybe it's surpassed its resistance point. It's got room to the upside. There's various different things that suggest that the market will go up for the next few weeks, for example. But it's not necessarily the right time to get in to make enough return. And that's where it's quite tricky. And that's where you need to utilize the lower time frames. Because, you know, imagine, so once you've kind of concluded and you've got a lot of conviction, you really believe that a certain currency pair is going to go higher. And you think, oh, there's a 500 pip move in that. The problem is then you say, okay, well, there's a 500 pip move in that. But if I'm trading it off the chart that I'm looking at, where would my stop have to be safe? And so if you're looking at a daily or weekly chart, it's probably going to need a 500 pip move, 500 pip stop. So because the information that you're using is a weekly chart, it means that the numbers are always going to be bigger. So if the market's already broken out and you think, yeah, it's going up, now it's about like, well, where do I need to put my stop? And that's why using the lower time frames really helps. Now, if you had a 500 pip move up and you put a 500 pip stop in, essentially you're making a 1-to-1 trade. So if you risk 1%, you're only making 1% of that 500 pip move. Now, if you do it slightly differently, which is the right way of doing it, and you use patience, discipline, and then you go over to, like, say, a 4-hour chart, well, that will allow you, combining those two things, to get in at a better price, and it also will allow you to place a much better stop. And so that 500 pip move could potentially be a 6 or 7% gain, which, you know, then almost covers your target for the month. And often, one little side thing, just, you know, away from your question, what I generally find has been the case for since I really became a professional, is that it's normally a tiny percentage of your trades that make your money for the month. So let's say you take 50 trades in a month. it's probably going to be 3 or 4 of those trades that make your 10%, and the rest will just kind of scratch out. Some gains, some losses. That's pretty typical. So it's very, very important that you catch a move. So when you catch a move, you've got to stick with the plan and try and get it to your target. Otherwise, your numbers will not work. You won't be able to hit that target of 10% if you don't do that. So if there's a trade there that should be doing 6%, and you're like, well, I've made 2%, I'm happy with that. That's a great move. The problem is that if you kind of listen to what I've just said, if only a few of your trades are going to make your 10% in the month, and you cut them short, you're not going to do it. You're just going to be a break-even or losing trader. So sometimes you will do something, and let's say, for example, on that example, like let's say you take it off at 2% up, and it was the right call, okay, and the market then goes down, and you would have made less or made a loss. If you're up 2%, you can add trade management to your strategy anyway. But let's say that happens and you make a loss, or you made the right decision. Who thinks it's the right decision if it was more profitable to close at 2%? And who thinks actually, no, we should have stuck with the original target of 6%, just out of interest? Be good to get how people would interpret that. So you take a trade, it goes up 2%, your target was 6%, and the odds are it will get to 6%, but you decide, actually, do you know what, 2% is great. I'm happy with that. It's money in the bank. Let's take it. Let's move on.
I guess if you're managing a $1 million account, then that could be one argument. That could be one argument for it. But is there anything on there? Are you going to give us anything about price action, or is it literally probability is that it's going to go for 6%? Is that because there was a lot that you said there for everybody to unpack? So I just want to clarify that it's just literally those stipulations. So yeah, it's hit 2%. It's looking like the odds are that it's going to go to 6%, but someone decides to cash in at 2. Is that what you're saying?
Yeah, exactly. So I can see a couple of people responding saying, one says, yes, 2% is secure and for sure, go for it. And then somebody else is saying something different. We don't know who they are but
very naughty. 3 Facebook users. Oh, Slavomir is in the house as well. Great. He just came through with that one. But another Facebook user, please click on the StreamYard link below so that you can register, so that we can see your name, just like Slavomir, and your photo. So yeah, most people are saying the consensus is saying take the 2%. JK tuning in live on YouTube, they are honest, are saying I will take the 2% as I'm new to this FX trading. So
yeah,
fair answer.
Yeah, and I'm glad that people are kind of saying that, because that's the reality of what most people do. Now, what you should do, I'm not saying, so 2% is a good gain. Like, if you're risking 0.5%, or even 1%, you've made twice the amount of risk that you had on. What you can add to your strategy and to your plan is how to manage your trades. If, for example, your account did grow to 2%, or essentially, so you don't go from 2% up to making a loss, right? So what you can add rules like, okay, if this trade goes up by 2%, I will trail my stop below the last swing low, for example, could be a way to do it. Or I would trail my stop behind a moving average that's been acting as great support. Or I would trail my stop behind a trend line that has been acting as great support. What you should have in your plan is kind of a collection of things that you can do to give you a little bit of discretion, because you're going to look at the chart. So like an algorithm will just follow rules blindly, Like it's like you have to give it its rules before, unless you're looking at artificial intelligence, which learns, generally speaking, an algo is just going to follow the rules that you give it ahead of time. It's better if the trader looks and says, well, look, okay, these are the 3 or 4 things that I could do. And, which one makes the most sense, and that's what you need to do. So then you trail your stop ups, you lock in some profits, but then you let the market go to where it needs to go. It's absolutely imperative that you do that. If you don't do that and you're always shutting down your winners, you're not going to make enough. Because only a very tiny percent, I'm going to repeat what I've said for the 3rd time, only a tiny percentage of your trades is going to make your gains. So I'm repeating it so it can really hit home. Like if anybody's got to that level yet where they're making money, I've seen some people in the group that are consistently making money. I'm sure if you go back and look at your trades, you'll see some winners, some losers, some winners, some losers, and then you'll see a handful of standout trades, right? That like are your 3-4 percenters, like 2-3-4 percenters, right? Maybe even a 5 percenter, and then you've got some losses and some small gains, maybe because you've trolled your stop or whatever. If you don't get those handful of winners, your account will not hit target. It's really that simple. So if you're always closing out early, you're never going to make those returns. Even if on that one occasion you were correct in closing it in terms of you would have made more money by closing, it's the wrong thing to do. If that wasn't the plan originally, if that's your plan originally, that's fine. Like so that's where the logical target is 2%, then it's absolutely fine. But if the logical target is 6%, you're like, odds are it will go up there, even though it will wave, odds are it will go up there, and you keep cutting it short, you won't get the gains that you need. And that's why I'm kind of bringing this up, because I think it's a really important thing to really consider. And it's difficult to really appreciate.
It's to keep going in and understanding this mindset, guys. And this is why we do this. And obviously, Andy brings things in a totally different way from his hedge fund and institutional background. So he's able to combine retail trader mindset with professional trader mindset. And that's why we're getting these golden nuggets. So there's a few people in there that are new to the group. That's why they don't have the link. I have posted the link in the group. Guys, please register. We'd appreciate that. But someone's saying, thanks for repeating. This is the most important info. And then we've got Susan Fletcher tuning in live on YouTube. Great to see another new name. Thank you for tuning in, Susan. She's saying, yes, my losses always end up bigger than my winners. Unfortunately, she knows exactly what you're saying. And in another comment, she says, I learned that one should stick to your plan, but I never seem to and would prefer a small profit rather than a loss. Now, this is fantastic that you're able to give yourself that awareness, because now this goes into another realm, which is massive in trading, which is psychology. And why do you think that is influencing you? Why are you more scared of losing than letting a winner win? And I just think it's fantastic. The newer you are to trading, the sooner you get in your mindset that you're going to lose way more times than you win. But if you can manage the risk, then the winners end up giving you what you need. And the best guys in the world, you guys are used to that mindset, right? It's the same with soccer. It's the same, football, or it's the same with sport. It's the same with what the Olympics have just been on. People who are competing, they're going against unseen forces. They're going against themselves. They're going against other human beings. We can't quantify what's going to happen. There's going to be more losses than there are winners, but it's just when you win, you make sure you let the winners run, right?
Yeah, can I just, I'd like to give Susan some advice, and ube it will help everybody. I think
I thought that's what I just did, mate, to be fair.
No, you just, anyway, I'm only joking. No, you did. Obviously, the psychology part is important, but more specific than that, you kind of want to look at it as as a game. So that's why, like at the beginning, we suggest that you don't trade with money that you don't trade with a lot of money. You trade with a small amount of money or even a demo account. And the reason is because the psychology side, it makes it easier. But you've got to get excited about the numbers, not about the P&L, if that can make sense to you. You've got to get excited about the numbers. What does that mean? It basically means that, let's say you're risking, I don't know, you normally would risk $200 on a trade, right? Which is a decent amount of money. But let's say we scaled it back and you decided, no, actually, I'm not going to do that anymore. I want to get my numbers and I'm going to only risk $10 per trade. So now all of a sudden you're so much more relaxed because you're like, okay, well, that's fine. Now you can have a much better chance of following your plan. And the focus is not the money. The focus is in the numbers, because once you understand that what I'm saying is true internally, like you really get it. So you play out your rules, and this time you follow your plan, because there is not such a big emotional pull to take. So let's say normally you'd be up $100 and you just close it early, like instead of going for the $400, for example. This time you're going to be up maybe $20. You're not going to be like, oh my God, let me take the $20 because I'm scared I'm going to lose it, right? Because it's not so, you're not so emotionally attached to $20. Now, the numbers I'm just making up. Obviously, some people, it is a lot of money, but I'm making it sort of so that you can trade without that emotion. And then what you want to do is you want to track your numbers. So just take your trades as they should by following your rules, and then go back and look at your trades and see the big ones, the big winners versus the normal ones. And you'll start to, you will eventually start to see what I'm saying is true, that a small amount of your winners are making your percentage gains. And what that will do is it will make you realize that actually sometimes, even when it feels like I should take my profit here, you understand that if you do, you're not going to ever make the gains that you want. You will know it inside you. So it's like it feels wrong, but you have to just go with it. But the only way you're going to get through that barrier, in my opinion, is by going through it the way I'm explaining, so that you can see it for yourself, so you can see that you actually have something, because then the possibilities are endless in how much you can make.
Cool. So knowledge bombs dropped. I mean, yeah, this is a really massive subject, and obviously we've got quite a bit of technical analysis to get through and fundamentals. So we'll bump it there. Maybe we can come back to this if you guys want to talk about it again. If you have got any other questions, let us know. JK is saying, can I ask what's the best time frame for trading in the UK? I was told it was between 8 till 11 a.m. I'm currently on a demo account, learning and practicing.
Yeah, I can answer that. So well, what I can tell you is that it depends on your strategy. So you have active zones and you have what we call dead zones. So active zones is where the volatility is highest and you get bigger moves. So that would typically be between, like you said, 8. I mean, we normally say between 7 and 10 is typical. But yeah, the moves start to happen more towards 8 o'clock. But between 7 and 10 is a good trading time for kind of more momentum style breakout type of trades. And then the sort of preceding time between sort of 10 and 12 is what we call a dead zone, for example, where the market's a little bit more quiet. But that doesn't mean you can't trade that, because in many ways, sometimes it's easier to trade there for a beginner because there's less volatility and you can trade ranges. So at any time in the FX markets, you can trade. That's why, like, even if you work, you can trade. You've just got to make sure you build a strategy that's suited to the times that you're trading. So the most active time in the market in FX is 7 till 10 o'clock in the morning, but that doesn't necessarily mean that should be the time you trade. So if it doesn't suit you, you can trade whenever. You just got to have the right strategy. You don't want to have a momentum strategy, a breakout strategy during the dead zone, because you'll just get literally whipsawed in and out.
Awesome. Cool. So look, that's answered that. Let's jump in to some more of the content. So imagine we've got all of that sorted. Then what we're going to do is we're going to break down the news, and then we're going to break down pro trade setup of the week. So yeah, let's take it away, Mr. Demi.
I can bring in my screen. 1 second, guys. Okay, there we go. So I'll just bring in Forex Factory. You can use whatever one you prefer. So what I always do is I filter for the high impact ones, and I generally keep the holidays in as well, because the markets will be quiet. So the red flag, and then the grays when there's a bank holiday, and it will tell us here essentially where the potential volatility is for the week. So looking at today, there's no high impact news. That's pretty typical for a Monday. Also bear in mind, we're in the kind of middle of the month. Typically you do get a lot of volatility at the beginning and the end. But it looks like a fairly busy one this week. So starting off on Tuesday, we've got quite a bit coming out from the US. We've got core retail sales. So that's going to be an interesting number to see. So that's essentially telling us how much consumers are spending in the shops. Are they feel, and it's an important number because it gives us a good guide as to how confident they're feeling. So you don't normally spend money that you don't have. So if people are spending money, it will be reflected in this number. So you can see here, we've got retail sales month on month. Core retail sales is just a slight variation in the calculation. And we have a previous number of 1.3%, and it's forecast to be 0.2%. And this is a month on month. So, it's a difficult number for them to get right as well, especially with everything going on. Lockdown, not lockdown, you can travel, you can't travel. That obviously impacts people's spending. So this number could be off. What happens is we normally price these numbers in. So we know the previous number, we know what's expected, and you can say that the dollar is pricing this in. If there's an unexpected difference, which there can be, for the reasons that I just said, then there could be a big move in the dollar tomorrow at 1:30 p.m. British Standard Time. So so a positive number would be seen as dollar strength. A negative number will be seen as dollar weakness. Then we've got Fed Chow speaking. You should always look out for these. These can create a lot of up and down movements when the Fed is speaking. And that's going to be at 6:30. So there's no official number or anything like that. It's just a general speech. So that can kind of give us some hint about future interest rate movements, which will obviously have an impact on the economy and therefore the currency prices. Then on Wednesday, we have the official cash rate coming out from New Zealand. We are expecting a hike of 0.25%. So we have that's quite significant. I mean, especially if that doesn't happen, but it is expected to happen. You can see that's pretty bullish. I mean, the fact that they're expecting that, you can see by clicking in, you can see that the previous ones that we've not had a forecast for an increase for quite a while. In fact, you can see, we go back all the way down here, where from May 2020, where we've had a 0.25% interest rate, the forecast has always been for it to remain at 0.25%. But right now, it's forecast to go up to 0.5%, which is very bullish for the Kiwi. And then we have the monetary policy statement to go with that as well, to kind of highlight what the future holds as well, which can also indicate potential future hikes, which again would be even more bullish. So we'll see what happens there. So what could happen, guys, is if for some reason we stay the same and we don't go up and they've got this wrong, then the Kiwi will immediately drop. But be aware, we then have the statement, and then the statement could actually indicate basically a hint that it's going to happen in the next quarter, for example, and then the Kiwi could go up again. So all these sort of things you have to take into account. So if it dropped, if it stayed at a quarter, you might even want to look at that as a buying opportunity, because essentially the market is getting close to a hike, which is seen as very bullish. But the immediate news will be, oh my word, it's not happening now, even though we were forecasting it. So you could look at that drop as a buying opportunity. And then we've got some more things coming out. We've got CPI from the UK, so inflation. Its previous was 2.5, expected to go down to 2.3. Higher inflation is seen as bullish for the currency. And then we have the same thing from Canada, in the inflation numbers month on month coming out. And then the employment numbers as well, which is a big number coming out from Australia on Thursday. So previous 29.1, expected employment to go dramatically down. So if we can get a positive number out of employment numbers from Australia, that could also really help the Australian dollar rally. So I think we'll leave it there, guys. There's a lot of news happening this week, and I think we should possibly look at one of these currencies today. Possibly the Kiwi. It might be of interest, especially with this. I'd be interested in the Kiwi and the Aussie, but I'll probably choose the Kiwi because of the expected cash rate increase, which is quite significant.
Sounds good to me, Bass.
Any questions, guys? Hopefully that makes sense.
Let me just check in with the questions. One question I do have. So I'm just checking in with the questions. No questions come in. Good. That's always a good sign. Everybody's taking on board the information. So earlier on today, like I said, some news came out. So the GDP growth annualized for the yen came out almost double what it was forecast. So obviously that's caused some strength. The Aussie yen is sat on a really nice, so it's come back down on the daily, it's come back down to the 38.2 range on the Fibonacci. There's some really nice levels in there. Do you think that they would kind of use this? I guess what I'm trying to say is, could it be possible that it would just range? Because now it's come down, it's starting to just build up that energy that you talk about, especially on the lower time frames. Would it be feasible that that would just stay in that little range until this news came out, and then they would use that news to then bolster up back up against the yen or any currency? I'm just talking about in general for this specific example. Would that be a feasible play to say, okay, well, look, technically it's looking really good, but is this going to be like the fundamental boost that will then push it back up and start the move back up that market channel line to a higher level? Do
you know what? There's no sort of hard and fast rule. I mean that's one possibility, that it could, if there's an imminent news coming out, yes, that could happen. It can stay in a range. It can just hold until the news gets released, and then it makes its move. That's pretty typical. I guess it depends. So yeah, it depends on what news is coming out and how important it is, and how I guess, for example, when the news is, when it's really up in the air and there's no certainty in the market about which direction it's going to go, and that's typically what will happen. So it's like the market will show you it doesn't know. So in that case, you can just trade support and resistance until the market knows more, and just take advantage of those moves. But yeah, if it's sometimes it's just a reaction. So it's like I was just saying there. Oh, we're expecting retail sales to be good, and then suddenly they're not. The market's like, oh my word, okay, we need to sell. But then it calms down and think, well, actually, no, it's still good, and then it goes back up. But when it's a news event that hasn't come out and the outcome is unknown, yes, the market can just sit there. In which case, that's quite hard to trade sometimes. You just kind of, if you want to catch that move, you either have to let it go and then wait for a pullback, or you try and buy at the lower end of its range and give it that room it needs. And then you can always add in and move your stop higher as if the market goes your way.
Cool. Awesome. And obviously people can apply that to their specific currency pairs that they're looking at as well. So look, with regards to the data that you've seen there, from the mindset of you as a professional trader, what would you be looking at now to say, look, I want to go and look for a setup?
Well, I mean, as I said, I'd be quite interested in the Kiwi. I think.
Against which other pair? Oh, well, against which other currency?
Well, the thing is, like, you could pair it up with whatever you want, but the less risky way is to pair it up with a currency that isn't here. Like, so for example, we don't have the yen, we don't have the Swiss franc. That, because when you have two, if you're trying to catch a swing trade, if you have two events that create uncertainty, like you might get the right entry off the back of this uncertainty, for example, and then let's say on the Thursday, let's say we played the Aussie Kiwi, then on Thursday you have that risk again. Like, okay, well, I've caught the move in the Kiwi, but now on Thursday, what if the employment numbers go against me? I'm going to give back all my gains, even though I was right on the Kiwi strength. So I would start by looking at maybe something like the Kiwi. You could look at the Kiwi Swiss. You could look at Kiwi Yen. I mean, that's actually fine as well. Maybe we can take a vote. I'm happy with either of those two.
Yeah, let's go with whichever one you feel.
All right, let me share my screen and let me have a little look at both of them.
Okay,
quick.
that's awesome. So look, we'll do that instead. So we'll have a look at both of them. It's going to be difficult to fit in the breakdown of the dollar, the DXY. So let's just look at both of those currency pairs, and then we'll go from there.
Okay.
So this week's Pips Like a Pro trade setup of the week is going to be between the Kiwi Swissy and the Kiwi Yen. You said, right? So we're going to look at both of them right now, just in case you've just tuned in.
Yeah, I'll have a quick little look at both, and then I'll break. I might end up breaking just one of them down. So let's start. Let's have a look at the Kiwi Swiss here. So we've got this. We've only got data since 2009. Let me see if there's a bit more data anywhere. Right, hold on. FXCM. Let's see if Randa's got a bit more, or currency.com. That's got even less.
How about on MT4? Will it have the necessary data on there?
Possibly, yeah. Let me see if I've got that up actually. Hold on. Okay. Do you know what? It's fine. We can do it on here. So yeah, we can do it on here. So this is the Kiwi Swiss Weekly. This is what has been happening. In fact, hold on, guys. Let me just see if I've got it here. For some reason, it's not showing. Otherwise, it might be easier to do it on MT4. We've got all our tools, but let me, one sec. I've got it here, but for some reason, it's not showing up. There it is. That's why it's minimized. Okay, got it. So let me see. Just so you guys know what I'm looking at. See if I can find it on here.
Okay, so this is this going to be the Kiwi Swissy first?
Yes, I'm going to look at the Kiwi Swiss, and if it's a good one, we'll stick with this one. So let's see how it looks on here. See, this hasn't got a lot of data at all, which is interesting. This is through Axie. They only go back to 2014. So what we'll do is we'll look at the bigger time frame on here, because it's always better to have more data. And then if we need to, we can just do the lower time frames on MT4. So I'm going to just see if we can draw some channels here and see what's actually been happening on this currency pair. And we'll just kind of break this down. So what I'm doing with this is I'm just trying to find at least 2 touching points that have a good line of fit that I can also confirm work down here as well. So that looks pretty decent to me. Even if you doubled that up, it's quite good. So that's kind of your channel, and we are basically in the middle of that. Now, what we can do is we can just take this and push that down as well. And that will just give us some extra hidden support and resistance lines that the market might hold on. Like that. And that's where we are. Now, I will just also have one more little look here. Just kind of see how the market likes to move. So that's quite a nice little angle. Look at that, really nice, acting as support. So we can use this as an extra layer of support as well, right there. And let's see if there's anything else that's got any use here. Okay. So with that kind of in play, I would say right now, kind of looking at that, it looks like a down channel that could break. So we're going to go look at the daily chart. But for me, this looks like an opportunity where potentially we could look for a buy. Now, if we can, let me see if I can connect this, and we'll make this a different color. So we've got a couple of points there. We'll make this one yellow. I quite like that. I'll tell you what I like here. If this is going to break higher, we almost want the news not to be as great tomorrow, so we can get pushed down. So what you can do is you could take this high to low, and we'll find out where the Fibonacci is. So I'd like to see where the 618 comes in, and that could be a nice little buy point for us. That comes in around there. So that is around 63.70. Let's stick a line in there. So about there. So you've got, that's quite nice. You can see that it's quite a nice reactive line of resistance, of support, resistance. It's a good little line, that 63.78. So that looks like a nice, interesting area. That somewhere there, or a slightly lower. So between 63.50, 63.78 could be a nice buy zone. So what I'm going to do is I'm going to see if we can go over to a daily chart. If I can. Over here. I'll bring in MT4 now. And let's have a little look. So 60, yeah, I quite like that. I'll tell you what I like about this as well. That's quite good. Let me get my pen out. Right here. What I like here is if you kind of look at this structure going down, you've got these moves. So if you see here, like these high points were kind of continuously, generally lower highs. And these lows here were lower lows in general. Okay, there's a bit of consolidation there. It's another low. And it's the first time we've kind of broken through that high. So it feels like this is a potential buy. So it obviously it can go up from anywhere as long as it doesn't take out that low. So that's quite that's a good sign for potential bullish price action. So 63.70 to 63.50 look like potential buy zones. Now, there's a few other things that we can do here. If I just take it over here to 4-hour chart, if I can. This is cable. So zoom out. Right, so let me see. Yeah, that looks nice. I'm just going to draw the channel on here as well. I can get my drawing tools out. So we'll draw another channel line here and see if there's been any kind of breakout yet. So that's the sort of, that's about right there. See, that's a quite nice fit. So we'll right click on this. We'll make this extended. So that's interesting. We had that, well, I guess you could take that as a double line there. So at the moment, we have failed to break above. So if you were to buy this on a pullback, you're basically, like you can see there, that's a nice resistance. That's kind of falling in within our zone. So anywhere like these sort of areas here with a stop somewhere there represents a good entry point for this to potentially buy. Now, one thing that I would say here is because you are buying with the expectation that the channel is going to break, I wouldn't go full risk on this one, because the reality is that we are trending down. We're channeling down here. So we're anticipating that the market might rally. And if it does, if you do pick it up here, somewhere here, I think you can expect to get something like that. A nice little push up towards these sort of highs up here. And if you want to kind of, do smaller targets, you can use the Fibonacci on the 4-hour chart. So if we think this, I hope I've got it installed. Yeah, I do. So if this market, for example, was to go up from here and it didn't pull back any further, then we'd expect this market to kind of find an extension here to here between these two levels. And that's absolutely possible. So the tricky thing right now is if you buy here and the news goes against you, there's a good chance you're going to get stopped out. And that's what makes it tricky. So my preference would always be to get in. So you want to put your order in tomorrow and see where we are. So what might happen today, which would be quite bullish, is this market maybe will stay around here. So it won't go down necessarily. Maybe it will form like a flag, for example. In which case, you've got to then make a decision. Do you want to buy this before the news, or do you want to wait until after the news? If you wait until after the news, you essentially probably miss the move, the original move, and then you're going to be looking at basically pullbacks. But the problem is if you don't buy before, you're pretty much hitting our target. If you have a look here, what this target is, you've got a target here of 65.86, an official one, and then an upper side target potentially, if it has an overextension, of 66.37. So let's take those numbers and put them into our chart over here. 65.86 is there. Can you see that? That's literally where we were targeting. So it's essentially what does that all mean? Okay, let's break that down. What it basically means is on something like this, you either have to, we're pretty much saying you're going to have to take the trade before the news if you're going to catch the move up. Now, obviously, if it goes the other way, then you could catch it on a move down, but then it's a completely different play. So it's not buying you could buy at this level, but with something like the news that's coming out, it could be a really big move. Something like retail sales, for example, it makes sense. You could stick a limit buy then. You could say, okay, people have over-exaggerated it. This market's going to go up because the weekly time frame is telling us it's going to go up. With something like this, it's not really the case. So I think this one's a tricky one to play. I think you can play it with low risk, but to make your numbers work, remember, like if you're buying here, for example, so you're not waiting for a pullback and you buy here and it flags, which it could do, similar to what we said before, Gavin, where the market might just wait for the news. If it does do that, then you're hoping that there is a hike tomorrow and it breaks out. Otherwise, if there isn't, the market will drop. And where will it drop to? Well, you will possibly drop to the 1.5 DTR, which you can use again to fade. But then again, that's a different strategy. So if you're going to take a trade like this, basically in summary, I would do it on low risk. But at the moment, I wouldn't put an order in personally on this one. If, like I said, if it holds here and you look at it tomorrow and it's here, you could potentially take that risk. But you're going to probably need to do, if your target's anywhere in this block, you're probably going to need to put a similar size stop to start with. So your stop will probably need to be somewhere like there. And then if the market does go down, you could average in. So it's a bit more advanced. So if you did a 0.25% here, right? And then you said, okay, well, if the market goes against me, I'm only losing a 0.25%, but maybe if we hit the 1.5 DTR, which is our extreme, or if we hit this level, I add another quarter. And then if we hit the 1.5 DTR, I add another quarter. But again, this is a bit more advanced. This is for people that are trading already, that have some knowledge of the markets and understand how to do that. If you are new, then don't do that. Just watch the market, play it on a demo account and just see what happens. But yeah, that's kind of all I've got really. Sorry, there's nothing better than that, but obviously I can't give you a setup if it's not.
Yeah, and this is interesting though, because it could be a feasible setup for a day trading option, trading news fundamentally. Just to put this into a category, would you say that this would be a breakout trade if it did happen?
This would be, yeah. But the thing is that you're getting in before the actual breakout. Now, there is something you can do, but it's really tough.
Alerts going off on Aussie Jappy again.
Yeah, no, there is something you can do, which is you can plug into a news feed and you can get real-time alerts of when the news comes out. So there's things called squawk boxes. So this is for very active traders. But you've got to remember that you're trading against institutions, algos that pick up information, whatever happens, way quicker and interpret it quicker than you will. So yes, it's quite useful, but to trade off it's going to be really tough. And they've got to take into account the liquidity, like the slippage. So if you try and buy off the back of what you've heard on market, you can get slipped and you can get really bad price entry. So in general, I wouldn't recommend it. I'm just making you aware that that's another option, a squawk box, which does require you to pay for that service. It's like a real-time news feed, and it kind of tells you when things are coming out that you haven't heard about. So if one of your currencies is moving and you've no idea why, if you have the squawk box, you'll always know why. But
awesome.
Yeah, that's it. Yeah.
That's thanks for clarifying that. That's the possible pro trade setup of the week. Obviously, the style and the philosophy here is to find low risk, high probability. So there probably could be much more higher risk options that you could take, but that's not what we're about here at the London Trading Institute. So yeah, that's a potential for a low risk, high probability, depending upon the news information that comes out tomorrow. So if you're interested in that setup and looking at it further, then the Kiwi Swiss will be the currency pair for you to take a look at and keep an eye on tomorrow when the news comes out. So that is it from us. That's another hour done and dusted. These hours go so quick, especially for a Monday. It's pretty crazy.
They do. And I think the just on a final note, like I think the important thing is that you don't have to take every trade that you analyze. You have to feel confident and have some conviction about the trade that you take. And if you don't, you just have to let it go sometimes. So like for something like that, my preference would be to let the news come out, see what happens, see if there's any reaction, and then plan a trade the way we described it. So you can use the analysis after the news if it's still relevant, because maybe you get a little up and down move, it goes as expected, and then you look for the buying opportunity where we suggested. So you don't have to trade something. You want to trade something that meets your plan, your criteria. And that's the only way you're going to grow your account consistently.
Great stuff. Well, look, thank you very much for everybody tuning in on YouTube and on Facebook. We've been live. I'm Gavin, the host. This has been Mr. Andy Demi. Is there anything you want to say before we leave for today?
No, that's it, guys. Thanks for tuning in. We'll see you tomorrow for the crypto if you're around. And have a good evening, afternoon, morning, wherever you are. And we'll see you soon.
Perfect. See you tomorrow, guys. Have a good one.
Take care, guys.
Oh, there's no music. Wow, that was normally so professional and so seamless. Take 2. We'll see you tomorrow, guys. Action.
Still.